Alright guys, what's going on? This is Ryan, aka Kenner Clark. I want to do this brief video update. Josh and I have not done an update the past few days. We've both been tremendously busy. I spent a lot of my time updating on the BlockRoots platform. If you're not already familiar with this, we have the BlockRoots YouTube, but we have an incredible educational platform. It's the best product out there right now. Alright, there's no other trading platform or group that even compares to it. As far as level of experience goes, I don't want to toot my own horn, but not only that, the interface, okay, the content we have on there, everything in markets from A to Z, hundreds of videos, hours of content. We get in depth into order flow. That's been my bread and butter, so you can imagine that most of our focus is on that. It's an incredible learning environment, right? And for the amount of money that we're charging, it's a steal, all right? And it's second to none. So this is the platform right here, and I spoke about this in a video about a day ago, and sure enough, we saw a bounce right where I said we would get a bounce. Okay, so I want to talk about a few things, okay, and I'm going to try to keep this brief, but we know how that goes. I want to talk about Bitcoin being a momentum-driven retail asset, all right, and what this means, okay, why this occurs, and how we could take advantage of this, and then I also want to remind you, don't forget that you trade your feelings about things. Okay, you don't trade indicators, signals, support and resistance flips. You trade your feelings about them. Okay, and that's one of the things that can get you in trouble. All right, especially when, with regards to disseminating information quickly and efficiently, and how you can get left behind because you're stuck trading your feeling rather than what the chart is telling you. Okay, so one's going to lead into the next. So let's just take a look at this really quick. And one of the things we offer the BlockRoots members is this Kenner and Clark indicator. It's nothing magical, okay? What it does is basically I have a few things built into this that I think are useful, okay? So we have indications of where we sit to a very important line in the sand with respect to identifying whether buyers are in control or sellers are in control. So dependent on where we sit, the candle bars are either going to be red or green. So you could see when the trend changes. Okay, we have the weekly and the monthly open levels labeled out. Okay, so you see the black and the red. And then another thing that I have, because sometimes I don't like to have my volume on the bottom of the chart, I have these indications of the volume being above the volume moving average. So when we're having a breakout, I want to see that all of these candles are obviously on above average volume. I could change what period setting I want that moving average to be as far as the moving average goes for the volume. But this is a good tool, and you can see that right now the trend has changed. This is something that we do offer BlockRoots members. Again, nothing magical about it. Okay, they all know how it works. So the momentum part. Okay, Bitcoin is a momentum-driven retail asset. So part of the reason momentum occurs is because people don't, or there isn't an even distribution, or rather dissemination of information. Okay, so not everyone absorbs the information quickly, so there's a little bit of a lag, and then therefore there's a herding behavior eventually when it becomes more and more obvious. Now, in efficient markets, in more traditional markets, in Forex and equities, there is a lot more efficiency. So since there's way more high frequency trading in that area, way more automation, even though there is in crypto, generally things get absorbed pretty quickly and they are smoothed out and reflected pretty fast. Now with crypto, when you have something like a signal given based on a technical level, since it is retail driven, there is a little bit of, again, latency or lag. All right, so the point of this is it is part of your edge, okay, or it is to your benefit to be able to not only quickly identify changes in structure, okay, changes with regards to where we sit with support and resistance, or supply and demand zones, or even if you use moving averages. It's important for you, when you do recognize this, to objectively recognize this and decide on it, okay? The more that you put your feelings into it, the more you're going to be, I would say, just consider it this way, all right? The slower you are to respond to something that you say is a signal of yours for your system, it only means that you're going to get in late, all right? You're supposed to act on the signals that you say that your system is based on. So if you how you define your system, that didn't come out properly. So if your system is defined on taking every bounce at a higher time frame support, you don't think about it. Okay, it might be approaching one way, it might be approaching another. But if you say that every 70% of the time when you take bounces at this some type of support, for example, and I'm just kind of speaking, I'm just speaking off the top of my head. that you take these trades and there is a positive expectancy, you don't think about it. Okay, so the sooner that you're able to disseminate information and act on it, the better off you'll be, because you'll be positioned early. Because what happens is the market realizes this, and then in effect there's this herding behavior once everyone realizes that something has occurred, such as a major retest of support or a major support and resistance flip, and so forth. So the clock ticks once something becomes obvious to you. Okay, because a lot of trading is done by looking at eyes on charts. All right, this is not exactly an efficient market yet. This is definitely not like other markets with that regard. There's a lot more discretionary traders, a lot less automation. Okay, and even the automation that exists in terms of speed, it is well behind traditional markets. Okay, well behind Forex, well behind the high frequency trading that I saw in trading equities. So that's one thing. Okay, that's where momentum gets its power from. Now, not everyone responds immediately. There's a little bit of a lag, and then why you have these blow-off tops in major moves that have a lot of momentum is because that's when finally you get that last rush of people that were sitting on the sidelines and finally just throw in the towel and say, okay, I need to get in. And guess what? They're always wrong. So the second part is don't trade your feelings. Okay, don't trade your feelings. Okay, even though this is what you're going to be trading when you're discretionary, this is why discipline and that whole mental aspect is so important. This is why you need clearly defined signals. You need a clear defined plan, okay, because you have to trade what your system is telling you, okay? Trade what the chart is telling you. So here's the thing. Talking back about this range, okay, getting back into this range. So here's the range that we spent a majority of our time within, okay, for the last month, all right? End of November, okay, all through December, beginning of New Year. So out of this range, okay, up into the highs, we're looking at fading the highs because the highs have, if you just consider auction theory, right, the highs are a value area high, okay, an area where we can expect buying to decrease, all right, selling to become more pronounced, prices above value if you're considering this range continuing. So it's to your benefit to sell the highs if you're looking to short, buy the bottoms, all right, not mess around too much in the middle, okay. It's easier to get flat-footed, and what that means, it's easier to get positioned incorrectly because the market flips back and forth a lot, and you'll get thrown out of your headspace, you'll get thrown out of your position even if you did have the right direction to begin with. So there's a bit more certainty, okay, not necessarily that there's more certainty, but you can define your risk a bit easier when you're at the extremes. So at least if I know that I'm fading the highs, okay, I have areas where I could define my stops a bit more. If I am, for example, looking to fade this move down because we're impulsively approaching a low, when you impulsively approach lows, they're more likely to hold than if you grind towards them. Everyone kind of says, oh crap, but the market reverses because as you can see, you have this little bit of a swing failure right here. It's a bunch of liquidity down here, a bunch of stops, a bunch of traders that are looking to take advantage of this breakout. So anyone can buy up all this liquidity, okay? So any buy side liquidity, or rather anyone who is looking to buy, can really get in here with a decent sized position, or a large position in that case, because we have all the stops that are placed right under this low to sell. We have breakout traders looking to take advantage of this. So from this low, we can define our risk. You might use something like ATR. Okay, so if you're taking advantage of a swing failure pattern, for example, you might use something such as 2 times or 1.5 times the daily ATR, so that you can be at least positioned outside of this enough to capture this move and then capture the reversal as well. So you can define your risk better at these extremes, okay, versus in the middle when there's a lot more chop, because this is a value area. And by value area, I mean that this is closer to fair value. You can see just from a volume profile standpoint, okay, this darker area right here is where we spend most of our time. So any place within here is considered normal behavior, all right? And it's hard to be completely directionally certain about this, and if you are, at least, it's very difficult to stay in a trade without being thrown off with all this movement. So this is a higher time frame range, and we've impulsed out of it. Okay, so you have to start, well, rather you have to take things into consideration from higher time frame to the lower time frame. So we impulsed out of this range. I would say it's sort of a higher time frame range. Okay, it's over a month now, and there have been key lines in the sand for this range the entire time. Okay, and they go all the way back. Get rid of that. They go all the way back to the previous range. So the low, okay, of the range before this deviation, which I indicated this with 2 lines as well, and then the daily low. So if you look on the daily right now, okay, this is the daily low. Okay, right here. So moving forward, these 2 lines, all right, were majorly important for this entire range. So back this up. Okay, now you'll see here's that September 30th low, September 30th low, September 30th low, okay, the daily low up here. So now we flip through 2 areas, okay, impulse through them, we skirted all the way up here. looking for shorts down here is, I would just say there's a poor risk reward at this point because you're approaching now what many are going to be assuming is going to be the support. So you have to think about how other participants are acting. Okay, you have to forget your own feelings at that point and consider where everyone else is. All right, always consider where someone else might be in trouble, where someone would be looking to get in. All right, consider this. This is a higher time frame range. We want you to think of 3 different people. Okay, think of longs that are in position and are happy now. So longs in position, they're going to be looking to get into a pullback, likely at the top of the range. Okay, and they might even be trading something like a fib. Okay, something like a fib up to the top, 382 between the 0.5 and the 382. You could even go from wicks if you want. You'll have the same idea. So from here to here, 382, 0.5. This is a good area to get into a strong trend. Okay, in strong trends, you're not going to get a tremendous dip. So their assumption is that this is a strong trend, so they're looking to buy in the area where there's a lot of confluence for that trend. It's at the support, right? Then think of currently people who are on the sidelines. They saw this entire move, boom, went up, and they missed the entire thing. Now they're definitely looking to get in a pullback. They need every chance they can get to get into this market, okay? And then lastly, everyone who is shorting this, okay, and maybe didn't have tremendously high leverage or had cross on and they're currently underwater but they're not liquidated, okay? If they shorted from here or they shorted from here, okay, or they shorted from lower, all right, think about the shorts that got in over here or over here, okay, even before this impulse out. And they were underwater the entire time and they didn't cut their positions because those people exist, all right? The mechanics, okay, or rather the pump over here is almost mechanically built into this structure, all right? Like it's programmed in at this point because of these shorts that are underwater. So what you'll see is price will come back down in this area, and those underwater shorts, no longer are they thinking about price breaking down and getting to their original target. They're just thinking, God, I can't wait to get out of this position. And what happens when shorts get out of a position? They close out and they cover. When they cover, they buy, so they create buying pressure. And what we teach in BlockRoots is to pay attention to open interest, because what you'll see on these moves down is if it is a covering, okay, so if one of these moves up, okay, this move up, if this increases on decreasing open interest, okay, what that means is those contracts are closing out likely, and we can expect that this rally is just shorts covering. Okay, so there is buying power built into this now from 3 different standpoints. So 3 different standpoints. You have sideline traders, you have traders looking to add to positions, and you have shorts that are looking to just get out of this, okay, that have no interest in taking this thing down to the low. They're just relieved that this thing came back to break even. So you have to expect that all this is going to occur. So I saw some conversation about opening up shorts over here, and I just thought that was completely ridiculous, because even myself, who was looking at fading, all right, the range high, okay, for good reason, and then considering that maybe that this would be an area to take out, okay, I have to immediately adapt to the new information. Okay, the new information is that this dip would be worth buying. Okay, and I mentioned this on a video in BlockRoots. Again, I think it was about 48 hours previously from now, maybe a day and a half. I'm not really sure. Everything kind of meshes into one. So this was expected. Okay, now one thing that you have to do is be able to respond to information quickly. Okay. When you see that something is objectively acting as support, so for example, come down here, this daily line from the range in October is acting as support. This was the high of this range previously, all the way back here. Okay, not right here I'm talking about, but all the way if we zoom out again. Make sure that I do this. So the high, going back here, okay, and then goes back into this previous range. Okay, and then if you extend this all the way back, you'll see that this goes all the way back. Okay, all the way into this structure, actually looking on a daily chart, excuse me, right into this major cluster. So this is an important area, okay? It was very important here, the low right here. All right, it was a very important area for that high, the initial rejection that we made our high with for this range. So you have to expect there's going to be some type of resistance when price comes down, meaning that buyers are going to resist this. They're going to bid this up. They're going to be looking to get in over here. Okay, and then you get this grinding behavior, so that's not necessarily a good sign when you approach a support grinding like that, because at this point, if you're grinding into support, longs are getting lulled into position. And when longs are entering and price is not moving up, that's a bad sign, right? If longs are bidding this up, all right, but price is not actually bidding up, meaning price is not actually increasing, that's a bad sign. So what happens is they usually get run over. So in this case, levels are for blowing through, all right? So you see this level though, okay, right here. It's important that we designate where this is. Okay, right here, come down below, retest, break through. It looks like we take out any shorts that we're trying to short off this break, take out those highs up here, reverse back down. Okay, Now going on to a 15-minute chart to show you more of this interaction though. So this, clear support, through, okay, above, come up to this area again. Okay, you can see that, come up to that area. Breakdown, now we approach a majorly important area. So again, this was the high point of rejection 4 times for the entire range, major rejection. So now this is an area where I mentioned on BlockRoots, you would want to look for a bounce. Okay, and sure enough, you get a bounce. Okay, but you're not really certain whether or not this is again going to be a bounce that is going to be worth shorting, okay, or is going to be a bounce worth longing. Okay, and you're not going to take anything long because you're still at this resistance. All right, you still have to see this resistance turned into support. When you see it turned into support, though, you need to take that signal. Okay, you have to trade the signals that your system warrants that you take. All right, and you don't trade them with any type of feeling or emotion. If your system says that when you see a clear support and resistance flip, okay, and clear signs, so this is why it's important to pay attention to price action, candle bodies, all these signs of strength. So if you just look over here now, we not only came through this level that was, again, support, turn, resistance, we broke back above this. So look, we came down, broke below, and now we're closing back above. All right, and look at this candle right here. So zooming in, see this pin? So close above, and then this following candle shows a ton of buying. Okay, you could just look at these 3 right here. Okay, close above, full-bodied candle, pin, buyers pushing this up. Okay, buyers pushing this up. We come down, and where do we retest and close? Back above. These are all your signs that you should be taking at this point to get out of your short at least. All right, to at least get out of your short and see that not only do we come above this level, but buyers are settling into this level. Okay, the bid is stacking up. The bid is supporting this move at this point. So just consider this as a block right now. Okay, so at this point, this is support again. All right, so you have to recognize when even the short-term trend is shifting. Okay, you can't hold back the tide with a broom, and you certainly can't hold back eager Bitcoin investors. So let me zoom out. I don't know what happened to that. Let's refresh that. So when you start to recognize that something like this is occurring, you only have a little bit of time. Why is this doing this? Let's reset this whole thing. The point is, when you recognize that something like this is occurring, you only have a little bit of time before you can act. Okay, because everyone else is going to be acting off the same information you are, because so many people in this case are using the same criteria. So the criteria being, clean break of support and resistance, clean retest. Okay, clean reclaim rather. So we reclaim this. There's all the signs you have. All right, you're taking risk by acting on this right now because yes, there's the chance that we come up like these previously and break down. But in this case, there's no support and resistance flip. Okay, no successful retest, no sign of it. You have the sign right here. So you have a little bit of time, okay, and there's a little bit of latency between when you recognize something or when it occurs rather, because you might recognize it late. You might recognize it after you've already, after this is painted and you're like, oh, that happened over there. So you have a little bit of time to recognize this before everyone else does, okay? And again, once this information is disseminated, broke down, all right, and completely processed and acted upon, it's too late, okay? Because at this point, a successful test of this area would have brought you to just as high. Okay, you'd have to assume that this would be the first trouble area. All right, I wouldn't say that an area like this would be so close, considering this is the proximity to this successful retest. All right, I would at least look for this area up here, or at most, in the meantime, I would not be longing it beyond this without any type of major pullback and sign of strength. But the point is, there are many people that were shorting down here, and all they were doing is basically they were shorting into market structure that that held us back for so long. It would be, I don't know, it's borderline insane to assume that this was just going to break down through this entire structure, okay, after creating this entire thing. Because at this point, there are a lot of people that, again, you can't underestimate the power of people to bid this up for a long period of time before ultimately maybe it does correct and make a newer low. That's not my belief that that's going to happen per se, but we could see this maintain this level for some time. I mean, look at all the other times that we maintained the level for a long period of time, stubbornly in some cases before breaking down. All right, the market's not just going to immediately make V-shaped reversals all over the place. All right, it's going to move sideways, and if anything, if this were to break down from here, I would expect that it would be something. That's not what I want to do. I would expect it to be something like this. You get a little bit of sideways movement, and then a break. Okay, sideways movement, spike up again. It's not just going to go straight down. All right, the market's not going to do that. Okay, or in this case, I would say there's a high probability it's not going to do that. So that's why I mentioned that longs are for buying at that point, because a lot of other people were thinking that way too. And if there are a lot of people that are currently not in position, they maybe feel like they missed out on something. If there are shorts that are underwater that are looking to get out, it just sets up this area as being the perfect storm for any type of bounce. All right, and this particular area was the area I mentioned specifically. All right, I pointed at this line right here and said this would be the area you'd get the bounce. And sure enough, that's exactly where it occurred. Okay, these lines are not magic. All right, it's just it's basic supply and demand. Okay, when these areas become established as one side of the market initially and then it's flipped, that role reversal is going to be enforced through mechanic means. Okay, meaning that it's going to be built into the actual orders that are sitting on the books. Okay, to trigger orders and to investor and trader psychology that are visually interpreting this as they're looking at the chart and acting rather manually. So you have to think of these dynamics. Okay, I mentioned the dynamics, okay, that occur within structure previously. I mentioned how there are sometimes, for example, when we talked about fakeouts, I mentioned how you have to start thinking like this. Okay, you have to think. Okay, for example, when we're moving within a range and we have a fake out, right, and it takes out, let's say it takes out a previous high. So let me just draw this better. So we're moving within a range, okay, and say we have a spike through here, all right, and then back down, and we're under the middle of the range now. So we took out these highs. So any shorts, all right, we stopped out. Okay, any breakout longs bought in. So they filled the liquidity of whoever is looking to sell big up here. Okay, it's a bad sign when this occurs and you fake out and break down below the midpoint of the structure. But also mechanically, you have to think about what happened when those shorts were stopped out. And this is how you have to think, sort of like chess, a few steps ahead. So any shorts that had stops over here, okay, short stops, okay, short stops, SST, any shorts that were looking to get in position over here, they were likely going to take profit down here. So they're likely going to take profit down here. Now that they're stopped out because we broke through this level, all right, and took this liquidity, that looks like a little guy right now. Now that they're stopped out, any OCO order, so any order that would close the other, all right, is going to be immediately lifted. So the shorts being closed out takes off that bracket. So it takes off that take profit. That would have represented buying power at these lows. So now that this buying powder also is gone, price is going to come through this level easier because there's less resistance here at this point. Okay, it's support, but you get the idea. There's less to resist price coming through this area. At this point, again, you have to think about what is occurring based on not only what you're doing, but where everyone else might potentially be positioned, where everyone's stops are, okay, where longs are in trouble, where shorts are in trouble. I wanted to keep this video short, but clearly I was unable to do that. Where we go from here, it remains to be seen. What I have to say, though, is that the more that this moves sideways, all right, the more bullish I will get, all right, in the long term, okay, with regard to us potentially entering in the next phase of maybe a markup. I don't want to say anything too early because that's not really how I trade. I don't think about things that far ahead. I have my long-term positioning that I add to differently than my trading. I keep those two completely separate. That's what really hurts crypto traders, is that they're unable to divorce themselves from or to remain emotionally dispassionate about Bitcoin from an investor standpoint. Okay, so rather they're not able to separate their trading head from their investor head because they're still tied to the idea of Bitcoin romantically going up to 100K in a year or something, whatever the new popular belief is. They're still tied to that, so every one of their trades is going to have that in the back of their head. So all of their short trades are going to think, damn, if I mess this up, I could miss the train. Okay, the same thing can be said with on the derivatives platforms. How everything is based in Bitcoin, that affects how you trade, because even when you get out of position, you're still long Bitcoin. So I try to not think about where we're going to be 20 steps ahead, but as long as what I would want to see if I'm currently long, which right now I am no longer long, what I would want to see is that this area is maintained. Okay, I would rather see us move sideways and maintain this level, and if we could get above 8,200, all right, and if we could close above that, the bullish argument right there is starting to really build steam, because at this point, or rather at that point, there's not a whole lot that went on over here. There's not a whole lot that went on over here, so there's not a whole lot of resistance in that case built in from a structural standpoint. And then not only that, accumulation periods, they don't just happen like many were talking about, where we're just going to do some. I pull out the wrong drawing tools all the time. Where we're just going to make a inverse head and shoulders and then immediately reverse from there. There's not enough momentum right now in this. Okay, what you'll see is something more like this. Okay, so you'll have this move right here. All right, sign of strength. Okay, again, my drawing tools. Sign of strength, right? Price will probably move sideways a little bit, and then you'll probably see a grinding move up before any major move up. Okay, because at this point, what the grinding move up is, okay, and this is why when you're grinding at resistance or grinding at support, that's not something you really want to fade. So when a price moves up to a resistance impulsively, I would take that trade any day and fading that, okay, from a distance. When price moves up to resistance like this, all right, it's lulling shorts into thinking that this is a comfortable short to enter into. But if you think about what that entails as price is moving up, okay, shorts are selling, but it's still moving up. What that means is that this whole area, this is my drawings for clusters, this whole area is full of stops now, okay, because these shorts are anticipating this breaking down. So anyone who is strong enough to move the market, and at this point, all of this explosiveness is built in right above, all they have to do is push this ever so slightly to create this move upward, and that's exactly what you had back here. All right, so you can see that what happened is there were major rejections at the high. So major rejections at the high, that scares a lot of people out of position, right? So major rejections at the high, and then we grind our way back up to this. And now suddenly it looks like, oh yeah, this is the obvious short to take. And what happens was that was an area where we saw there was a large discount. So there was indications that there was heavy short positioning. All right, so again, I tried to keep this brief, but I was unable to. I apologize for that. I know that not everyone has a long time to watch a YouTube video. But this is why I suggest you guys take a look at BlockRoots. For $49 a month, first of all, if it was, I just put it this way, for that amount of money, you're getting tremendous amount of value. There's nothing out there like it. And I could say that with utmost level of confidence after what I've seen. I've done my research. There's absolutely nothing out there like it from an experience standpoint, from a quality from a user experience standpoint, and from just having someone who knows what they're doing in a market, who has been in the markets for over 13 years now. So, well, it's 2020, and yeah, about 13 years now. All right, guys, so that's that. I hope everyone has a fantastic day. Enjoy your weekend. If you have any questions, always feel free to direct message me on Twitter or on YouTube. I answer all the messages. This is Kenner Clark again. As always, stay sharp, exercise proper risk management, and trade effectively.